Often when people first start shopping for property, they come across a lot of terms that they're not familiar with. One of the most frequently seen terms out there is called PITI. People really don't know what this stands for, so let's just talk about that real quick. P stands for principal, I stands for interest, T stands for taxes, and the second I stands for insurance. Principal is actually the amount of the loan, the actual amount that you've borrowed. Interest is the interest rate that you've agreed on, that you've shopped with your mortgage broker to find. Taxes are actually your property taxes. Insurance is your homeowner's insurance, and every loan is required to have homeowner's insurance. It does not include your HOA dues if you're buying a condo, or any mortgage insurance if you have a loan that requires mortgage insurance. Although you can calculate what your PI and TI will be manually, there's really no need to rack your brain. There's plenty of online mortgage calculators that you can use. We have some set up on our website, and if you're a client of ours, we're happy to forward you a copy of this actual spreadsheet that I'm going to be using today. So to figure PITI, we need to take a look at our principal. Remember that principal is just the loan amount. It's not the purchase amount of the home. So let's assume the home that you're going to buy is worth $400,000. I'm also going to make the assumption that you're putting 20% down, and that's going to leave a balance of $320,000. So I'm going to put that in here, and that's your principal, the amount that you're borrowing. I don't know what interest rates are at the time that you're watching this video. Today they're around 4.5%. I'm going to assume that they're going to be going up in the near future, so let's just estimate 5% as an interest rate. So we have your principal and we have your interest. Most mortgages are for a term of 30 years. If yours is different than that, it's because you're already pretty savvy in this process and you've got a different plan in place. But we can see that the payment on this is $17.17 and 83 cents per month. Now, a lot of times when you see payments advertised online or on billboards or on the radio, they may not be advertising the PITI. This is just the principal and interest payment. Taxes are very significant, so you want to make sure that whenever you're ballparking figures, you really know exactly what you're in for. Now, in San Diego, property taxes, well, everywhere, property taxes are based off the value of the home, the new purchase price. And recall that that is not the $320, that's the $400,000. So I'm going to plug that in here. Now, San Diego, back that up. 2, 3, it'd be nice to get a home for $40,000. I don't think it's going to happen. San Diego's property tax base is 1.1%, and if you see up here, I actually have this at 1.25. So I'm going to change that to 1.1%. So we drop it down and we see that the property taxes are $4,400 a year. We need to estimate homeowners insurance, and that can vary quite a bit based on if you're doing multiple policies with a policyholder, or if you're first time. For purposes of this, let's just estimate about $100 a month, which is going to be $1,200 a year. And we don't need to worry about mortgage insurance because we're not talking about that in this conversation. And there is no HOA dues included in this. We're talking about a single family residence here. So our PITI on $320,000 at 5% for 30 years with taxes included and homeowners insurance is $21.84 and 50 cents per month. So, this is going to vary a lot based on your scenario, but always give us a call. We're happy to talk to you about it and answer any questions that you may have.